Good day, everybody. Welcome to the show. Craig Cobb here from the Gromy Co. Follow me on X at Trader Cobb, COBB for Bravo, and on Facebook, it's Craig Cobb, COBB. Tomorrow is my free newsletter. Go to thegromyco.com. Get yourself on there because this month it's not just going to be the newsletter that you get each week, but I'm going to put together 4 different things that you can get started with your trading, or if you are trading, to help you improve. They don't take ages. They're 4 quick wins for you to take advantage of whilst the markets are as they are. So go ahead to thegromyco.com and get yourself on that newsletter for that grouping of wonderful free content for all of you. Anyway, let's have a look at the market. Oh, geez. War, what is it good for? Absolutely nothing. Say it again. Look, it's been a wild time. I've been talking about the ES or the E-mini, the S&P 500 for quite a while, and I've been sharing it with you guys here on this particular show. And look, one of the things that I've seen is that, this support that I've been talking about, well, we've well and truly broken that now. I've been sort of talking about the S&P 500 potentially holding the keys to a further downward event for Bitcoin. That's just logic. As markets start to have pullbacks, we tend to see, the more risk on assets sell off to cover positions. Now, what we've got here is the beginning of a pullback on the S&P 500. Now, a couple of things to note here is that I've been talking about this pullback for a while now, before there was war on the cards. Now, we've got war on the cards. We have got well and truly war on the cards. We are playing a game of war, and both sides are holding cards. Now, we've got a pullback on the way here. I had talked about before war, a pullback of about 10% back into the lower end of this cradle zone, roughly a 10% pullback. Now, because we got a lot of things going, we could see a deeper pullback. We really could. But for now, I'm not going to get ahead of myself. Waiting to see if this continues its downward trajectory. It probably won't happen immediately. We have seen a significant decline over the last few days. Keep in mind, this is the futures market that is opened earlier or Sunday night for the US. From the high to the low, it's about 5% or 4.6% of a pullback. At some stage, it'll probably bounce. Anyway, we're moving lower. The support has been broken and the S&P 500 looks weak. Funnily enough, though, at the same time that the S&P looks weak, Bitcoin has printed a bullish candle. Yes, so the S&P broke down, gapped down, and Bitcoin is up 2.8%. But a couple of things that I really want to point out. Let me come across the top 10 here. In my view, Bitcoin failed its first test. Now, let me show you what that looks like. I'm going to show it to you here on the daily chart. I don't know why it's not drawing it back here like I normally do. You can see. Now, it's not exact. It's not a bingo on the money exact type thing. Have a look. The old highs over here, resistance 1, okay? Resistance 2. They're pretty accurate. They're pretty accurate. We got a third over here. And that was the high or low on the monthly chart that took me out of the market. Have a look. That level that we just drew, that I just showed you, I'll get rid of that. We came up, we hit that, we tested that in a very strong day, Wednesday of last week, and we have since sold off everything just about straight after that move higher. So the first level of resistance for Bitcoin, it failed. We got up through 70, and what we did was similar to what we saw over here. Have a look. Consolidation, 1, 2, 3, a resistance level. Over here, something very similar with a bit of resistance. We broke up through it. We rejected it. This time over here, we broke up through it and moved again, and then this big rejection. I'm expecting at some point, it doesn't have to be immediately, for a move, maybe not as big as this, but another fairly significant leg down. Markets get messy. They consolidate during bear markets before an event that moves lower. As you can see, consolidation, big move lower. We're in our, third, fourth week of a consolidation here. We've rejected the first level of resistance and we've moved lower, but we are largely still within that range. I do believe there's further downside to come for Bitcoin. Doesn't mean it won't move higher. I'll show you the weekly chart. The weekly chart, and you can see it so clearly here. Look, resistance, resistance, support, breakthrough, resistance again. We were so close to 7 weeks down in a row, having given back the entire move into the close. We closed up 0.3%. It's an incredibly weak chart. Is that a pullback? Look, it pulled back for a brief moment, didn't quite get into the cradle zone. I wouldn't be surprised at all to see it pull back into this zone here before giving another leg down. Bear markets rarely occur in a straight line. We've pretty much had two straight lines. One over here, little pullback, two over here. I'm waiting for the third, which I hope will take us down into the 50s, at which point I'll be more than likely buying Bitcoin once again for a multi-year hold. So Bitcoin, there you go. That's what I'm looking at. This bounce that we're seeing right here, it's one day. We have had 4 days of selling off. That includes the weekend. And then Thursday and Friday, Friday 3.9% down, Thursday 2.47%. Across the market, we are seeing some very similar signs, also looking very similar to Bitcoin. Ethereum consolidating, Binance also consolidating, Cardano in the same boat, just consolidating. In fact, Cardano has actually had a leg down. It's looking a little bit more bearish, and it does open the door for potential short trades on this 8-hour time frame here, if that's what you're looking for. But across the board, like I say, a lot of consolidations leading towards lower price action. So I'll be keeping an eye on that. Tron's the only one that's sort of moving higher at the moment. But yeah, market-wide, the consolidation is still well and truly in play. Bitcoin's dominance, it's up, it's down, but it's not going anywhere. Again, look at the consolidation that we've got on this dominance chart. So my stance, as I sit in cash, is that it's the right place to be at the moment. I'm going to wait and see what the market does with a leaning towards downside. There's been some fantastic trading opportunities. Just keep in mind one-to-one. So if you're going to risk 100, look to make 100 or 150. Keep your targets relatively low because we are getting moves. In fact, the last 3 weeks there's been a heap of great trades. We've had some, a high win-loss ratio. Keep that target relatively close. You get in, you get out. You get in, you get out. And that's how you trade for profit during these highly volatile periods. And it's how you stick around and keep your sanity throughout these periods too. Now is not the time to be looking for big running trades, especially not to the long side. Now is the time to consolidate, take small wins often, and get on with it. And if you like it, jump on the free newsletter. As I said, there's a heap of stuff there for you. And I hope this finds you well. Have a wonderful day, a wonderful week, and I'll speak to you again next week. Bye for now.